up, guys? It's Jordan from LaundromatResource.com, and I am especially excited that you're here with me on this episode because the last couple of episodes, I've sort of been teasing out just a little bit how you can gain massive wealth very rapidly using laundromats and the real estate that the laundromats are on. And today, I'm gonna show you the nuts and bolts of how that works. Now, this requires us to do a little bit of math, so stick with me, but I'm gonna explain it. It's very simple, and I'll show you step by step all the calculations that you need to make. And not only that, but we'll have a resource at laundromatresource.com on the resources tab that gives you for free a spreadsheet that helps you do these calculations for yourself and figure out how to value not only laundromats, but also the property. So go check that out after this episode, laundromatresource.com/resources. And that's for free. So be excited about that and be excited about today because we get to do some math together. Whoop, whoop. Who's excited about math? I am. I love math. And this math especially is math that will put money in your pocket. And that's the best kind of math. So without much further ado, let's get cracking on this math. This particular technique assumes that you are buying the laundromat and the property that it sits on. And I'm going to show you how to use this situation where you own the business and the property that it's on to create wealth, to create net worth, to create equity out of nowhere. So let's check this out. It's really incredible, actually. So let's make some assumptions here. First of all, we have a laundromat. And let's assume that we buy it at 4 times the net operating income, and it's 2,500 square feet. And let's assume we buy the property. And it's valued at a 6% cap rate. Okay, those are our assumptions. So let's just assume here that we buy the laundromat for $200,000. So that's how much we buy it for, and we buy the property for $550,000. Okay, that's good. Good. Okay, so now we have a laundromat and we have property. Now there are a lot of ways to structure a deal, and we'll go through those in a future episode. But for the sake of simplicity and just to kind of keep things as standard as possible, let's assume that for both the laundromat and the property, we're getting a loan and we're putting 25% down on those two loans. So that means for the laundromat, we're putting down $50,000. And for the property, we're putting $137,500 down. Now that may seem like a lot to you, and maybe these numbers are not realistic for wherever you are. That's okay. The principles still apply, and we'll just, I'll teach you how to do it on your own so you can plug in your own numbers. But let's make this assumption for now. Now, the laundromat is valued based off of a 4 times multiplier of the net operating income. So that means our NOI, our net operating income, is also $50,000. So 50,000 times 4 is $200,000. So we're at $50,000. And that means the NOI per month is $50,000 divided by 12, which is $4,165 per month. Pretty good. Okay, and that assumes all your expenses are paid except for loans. So if you finance $150,000, which is the $200,000 minus the $50,000 down payment. So if you finance that over a 20-year loan, at around 5% interest rate, your loan payment is going to be about $1,000. So your loan is $1,000 per month. So that means your cash flow is your NOI per month minus the loan payment, which is $3,165 per month. Pretty good. So that's your cash flow right there. Okay, so now let's go back and calculate some numbers about our property. So we have the property at $550,000 and the down payment of $137,500. We paid $550,000 for the property. So we need to calculate how much income we're charging how much rent we're charging the business in order to figure out how we got that $550,000 valuation. So we're at a 6% cap rate. And that basically means we multiply this $550,000 times 0.06 or 6%, 0.06, and that gives us a result of $33,000. Now, $33,000 divided by 12 is $2,750 a month. So that is the rent that the laundromat is paying to the property right now. So as we speak, rent is $2,750 per month. That's pretty good. So that gives us the valuation of $550,000. Now, you're going to have a loan on this property. So let's assume the same terms on the loan. It's a 20-year loan, 5% rate on whatever's left over after your down payment. And that gives us a payment of about $2,700 a month. So loan payment is $2,700 per month. Okay, so that leaves us with cash flow of this minus this, which equals $50 per month. So not a ton of cash flow there. And our only equity so far is the equity that we have put into the property. So this is not a bad situation because you're still getting $3,165 a month of cash flow from the laundromat, plus the extra $50 of cash flow from the property, which is not bad, $3,215 per month. So pretty good. And that's not bad in and of itself. You're already making a 20% return on your investment right off the bat, and you've done nothing. Okay, let's take a look at where this magic happens. Now, in order to set this up, you need to know a couple of things beforehand. First of all, you need to know I'm not a lawyer, I'm not a CPA, I'm not advising you. This is just for educational purposes only, and I highly suggest that you consult a lawyer or CPA before you do any of this. Make sure everything's set up correctly. But here's the basic premise: is you have your laundromat, you have your property, and they're set up in different entities, whether that's an LLC, S Corp, however you and your attorney or CPA decide to set it up, and they're separate. The property draws up a lease for the business, and that includes rent. Now, I also highly suggest that you draw up, if at all possible, a triple net lease. And what a triple net lease is it basically makes the business liable for all expenses, taxes, insurance, and maintenance. That means the property essentially has zero expenses because the business is paying all expenses and rent. And what that does is it essentially makes the net operating income whatever the rent is for the property. That will help you in the long run. So let's do this math and see what happens if we increase the rent to the laundromat by $1,000 a month. So we have all the same stuff, laundromat, and it's 4 times the operating and net operating income, 2,500 square feet. The reason that's important is because usually rent is based off of price per square foot. So I just wanted to show you that. It just so happens that if you do the math on our first example, price per square foot is $1.10 per square foot. So just keep that $1.10 per square foot in mind. And again, we're doing a 6% capitalization rate. We bought the laundromat for $200,000. We bought the property for $50,000. We put 25% down, which is $50,000 for the laundromat, and $137,500 down for the property. Okay, so what this does, remember, we're increasing the rent by $1,000 per month, and this does some interesting things to both the laundromat and the property. Here's what it does to the laundromat. So the NOI per month from our previous example is $4,165 per month plus we're going to minus the $1,000 because that's coming out of the rent. So minus $1,000 equals $3,165 per month of net operating income. So that's the new NOI is $3,165. Now we have our loan, which is about $1,000. So that brings our cash flow down to $2,165. Now the difference between our cash flow before and after is our previous cash flow, which is the $3,165 minus the $2,165. So that's a difference of $1,000, which is the same as what we increased the rent by. So that would make a lot of sense, right? Now, here's the sad news of all of this. This is the saddest part. So now this is our cash flow. Okay, if we multiply our new net operating income times 12, we get a value of $37,980 per year. Now, if we multiply times that by 4, we have a new value of our business of $151,920. Now, you might realize that that is significantly less than what we purchased it for, and that's the downside here. So the value lost, $200,000 minus $151,900, we lost a value of $48,080. Now, that doesn't seem like a very good thing, and you're right, it's not good. But we ended up charging more rent. So obviously our expenses are going up and our value of our property or of our business is going down. But let's see what it does to the value of the property. Okay, so we have a rent increase from that. Let's just say top of the market rent is $1.50 per square foot. So remember our last example, we had been charging ourselves $1.10 per square foot. So let's raise it 40 cents per square foot times our 2,500 square foot building. So the rent now is going to go up to $3,750 per month. Good. So the rent increase is the $3,750 per month minus the previous rent, which was $2,750 per month. So the change in rent, the rent increase, which is what we charged over here, we already knew this, is $1,000. Okay, so now we have our loan payment of $2,700. And let's find our cash flow, which is our rent minus our $2,700 loan payment, which is $1,050 per month. So the change, so that's our cash flow now, which is a good thing. That's good. That's bad. And this is bad. Okay, well, we got a little more cash flow on our property. Really, all we did was move that $1,000 from our business to our property. But we have a little bit more cash flow now, which is good. Now, we gained $1,000 per month at our property. Okay, now we're getting our net operating income is the rent, if you remember correctly. So our cash flow has gone up, but we don't calculate value based on cash flow. We base it off net operating income. And remember, net operating income is rent minus the expenses, which the business is paying for. So there are no expenses. So our rent is our net operating income. So let's calculate our new value of our property based on increasing the rent by $1,000. This is what it is. So it's $3,750 divided by 6% or 0.06. And what that equals is $750,000. That is a big smiley face because we bought it for $550,000. Now it's worth $750,000. That's an equity gain in the property of $200,000. So if we subtract out what we lost from the property from what we gained on the property, that leaves us with $151,920 of equity that we gained. And that is assuming we did nothing to the property or the business to improve it. All we did was move money around. We didn't increase any business. We didn't do any value added whatsoever. We bought the laundromat at the normal 4 times the net operating income. We didn't increase business. We just shifted $1,000 from the business to the property. We still have the same cash flow in the long run. If you add them together, the same amount of cash flow, we just kind of shifted it from the business to the property. And what that did was increase the value of our property dramatically. And you've just put $150,000 in your net worth bucket. So that's incredible, but that's not the extent of all you can do. Let's take a look at how you can keep this ball rolling and increase it even more. Check this out. Let's assume that now your property is worth $750,000. You have a loan on it of $550,000 minus your $137,500. So your loan is $412,500. So this is your loan payment. Or your loan. That's what you owe on the property. Now, what you can do is take your new revenue to the bank and just say, hey, I have this property. Here's what it brings in. It has no expenses. I'd like to refinance it. What can I get for it? Here's what they'll do. They'll verify how much your property is worth, and they'll say, yeah, actually, your property is worth $750,000. We'll give you a 75% loan to value on it. So it's worth $750,000. We'll give you 75% of that point. So you multiply it by 0.75, which is 75%. And that gives you 75% of it gives you a value of $562,500. Now you can take what you just refinanced, your $562,500, subtract out what you originally paid for it, which is $550,000. And that gives you $12,500 extra, more than you paid for the property. Now, there's going to be closing costs and a little other expenses. So let's just say that comes out to being zero and you're break even. You just got a property free of charge. The equity you have in the property is $750,000, the new value, minus the $562,500 that you just refinanced out. That gives you a value of $187,500. That's how much equity you have in the property right now, and you have zero of your own dollars into it. You've pulled all $137,000 out of your property. Now you have that back in your bank account and you can go do this process all over again. Can you start to see how powerful this is? Can you start to see how you can use this method to really expand your wealth and your business? I hope you start to see just how big of a deal this is, because this has the possibility of you being able to really rapidly expand your wealth and your assets. And all this while, your customers are paying down your loans on your property and on your business. You're putting money in your pocket, and you've just put $187,000 of equity in your net worth bucket. And you've done nothing except for move some money around. Now imagine what you can do if you improve the business and improve the property and you're able to charge even more rent. It just can get out of control really fast. So this is the secret to growing very rapidly. I hope that you are able to take this and run with it and really, really expand your net worth. If you want help on how to do that, we at Laundromat Resource, we have a coaching program that is free. You can sign up for a free 15-minute coaching call with me specifically. We'll get on the phone together. You can ask me your questions. I'll help you out as much as I can in that 15 minutes. You can sign up on the website, laundromatresource.com, or on our Facebook page, you can sign up also. Facebook.com/Laundromat Resource. Check us out there. Let's get going building your wealth. It takes action to make things happen. You can sit here and watch these videos all you want, but if you don't take the first steps, you're never going to build that wealth that you want and gain that freedom that we all want. The freedom to do what you want to do, with whom you want to do it, when you want to do it. Let's let Laundromats be the vehicle to help you get there. Now, some of you guys here might be very interested in buying and running your own laundromat, and that's awesome. Our next episodes are going to be very practical in how you can find and analyze and purchase a laundromat deal and how you run it after you have it, because man, it can be scary not knowing what to do. That's what we're here for. But some of you guys might be interested in the cash flow possibilities of laundromats, but you don't want to run a laundromat because, to be very honest, it is a lot of work to run a laundromat. It's not a lot of hours per se, but it is a lot of work still, and you're still putting your time into it. And that's okay if that's what you're looking for. But if you're looking for something more passive, sign up on that coaching call and let's talk about some options on how you can get into this cash flow machine passively, either by partnering with me or someone else, or by employing a management company to manage your laundromat for you. So, man, I am super excited. Again, go to laundromatresource.com/resources, and I'll have a spreadsheet put up there for you to check out free of charge on how to analyze a deal this way. We're going to do more videos on how to actually analyze the value of the laundromat and how to make sure you are getting what was advertised to you. All right, if you guys found this $187,000 video valuable, I mean, technically it could be $187,000 or more worth of video right here. But if you found this video valuable, I would really, really appreciate it if you would hit that subscribe button, hit the little bells. That way, every time we release an episode, you get to experience it and learn from it and hopefully take some action behind it to start building your wealth. If you have questions that you'd like to see answered about laundromats or the laundromat industry, put those down below and I will try to get to every single one of them. I have a ton of content that I want to go over with you guys, but I also want to go over the things that you want to hear about. So comment below, give us a like and a subscribe, hit that bell. That way you don't miss an episode. Look forward to seeing you guys next time. And with that said, hey, let's build some wealth together. Go take some action today. We'll see you next week on the Laundromat Resource Podcast.